Hello everybody, welcome back to another episode of The Lunch Hour, brought to you by Collab, where we eat, sleep, and breathe finance, news, and everything in between. So if you like finance, news, or crypto, make sure to subscribe. There is a lot going on in the crypto market today, so like always, let's dive in. So, like always, we are going to start by looking at the overall crypto market. Right now, we are sitting at $2.26 trillion. The overall volume has ticked up from yesterday. We are currently at 114.5 billion in the overall volume. Bitcoin dominance has ticked down slightly, currently sitting at 40.5%, while Ethereum has moved up about 0.7%, pretty big jump, to 21.4%. Right now, the cryptocurrency market is up almost 7%, 6.91 to be exact. There was a lot going on since yesterday after the Fed Chair Jerome Powell, after his press conference. You know, he sounded a little more dovish than people were expecting when it came to hiking interest rates. So long story short, he said that the Fed wasn't going to start hiking up the rates until they were done with their QE tapering. So right now, Bitcoin is up 3.3%, currently sitting at 48,454. Ethereum is up a whopping 11%, currently sitting at 4,088. Binance also up almost double digits, up 7%, it's currently sitting at $540.99. Solana up 17%. So pretty much in the 24-hour period, pretty much everything is green. There's a lot of green definitely in the crypto market. Definitely a good thing. Especially, you know, a lot of cryptos that were literally sitting, you know, at the edge of going bearish. You know, they were sitting at their support line, and a little bad news could have certainly sent the entire crypto market into a bear cycle. So right now, we're still not out of the woods. I would like to see Bitcoin, you know, close the week between 51 and 53. 53.5 would make me very happy. I don't know if we're gonna get that, but over 51 would definitely make me happy. But let's dive into the news. Bitcoin and stocks go green as certainty is reached. Bitcoin rose to 49.5 before currently trading at 48.7 as Dow rose 1% on Wednesday, while the UK's FTSE sees a 1% gain with futures showing green for the day. The Bank of England has raised interest rates for this first time in 3 years, up from 0.1% to 0.25%. Markets not only seem to not care, however, they appear to be happy about it, with U.S. stocks rising after Powell suggested that there will be 3 rate hikes next year, and asset buying printing will run to 60 billion from January down to 75 billion currently. So the Fed, in his press conference yesterday, he did say that they're going to accelerate. Originally, they were saying that they were going to be completed with asset purchasing by June. Yesterday, he said that they're pushing it to March. He sees the employment numbers being stronger than expected. Even though inflation is running a little higher than they want, they still believe that they can get it under control in the short term. Some say that Powell's bullishness on the economy, up 4% next year, he says, made traders optimistic despite the faster than expected increase in interest rates forward guidance. There is no increase for now, and in 2024, the forward guidance is lower than expected, so stocks have chosen green after 6 weeks of red. So yeah, again, he was a little more dovish than people expected. Analysts were still saying that the Fed was going to accelerate their tapering, and that's obviously exactly what he said, to be completed by March. So right now, crypto definitely took that news in a positive way. As you guys saw, you know, again, the cryptocurrency market is pretty much green for the 24-hour. They are still bleeding for the week, so hopefully we have a green candle for the week. So we have to wait till Sunday to see what happens there. But just like I was reading, even though Powell acknowledged that the development in the crypto space needed constant monitoring, he expressed his belief that stablecoins especially needed legislation urgently to address the risks. The matter came up in a conversation about the report from the President's Working Group on Financial Markets. When asked by Michael Derby of the Wall Street Journal, Powell agreed with the findings of the reports, which concluded that stablecoins issuers needed appropriate federal oversight similar to that of banks. He stated, "Stablecoins can certainly be useful, efficient, consumer-serving part of the financial system if they are properly regulated. Right now, they aren't, and they have potential to scale, particularly if they were to be associated with one of the very large tech networks that exist." And, I agree with Powell 100%. I'm not in the camp that says that we should ban them completely. They have no use, this and that. Obviously, the share of the Federal Reserve says that they have utility and they can be consumer serving. That's the mentality that a lot of people in Congress lack. I was listening to Sherman, congressman from California, saying that they have no utility. They move against the US dollar. But somebody literally that does this for a living and is in charge of running the Federal Reserve says that they have utility. Like, how can you go against that? Riddle me that one, please. But with that being said, he also stated that since the public relies on government and the Federal Reserve to protect its interests, it is especially crucial to ensure that the digital assets payment system is safe and reliable. And I'm all for that. I'm all about regulation and protecting investors, but you don't protect investors by preventing them from investing into an asset class. That's how you keep people poor, in my opinion. I mean, correct me if I'm wrong. That's what I believe. It's better to be in a regulated, protected market than not in that market at all. So I'm definitely in his camp. It is interesting to know that Powell does not believe in cryptocurrencies pose a financial stability concern for the country. However, at the same time, he still acknowledged that the risk factor associated with digital currencies. In his opinion, instead of going the extremist route like China and banning all crypto-related assets, implemented structural regulations on stablecoins could bring a win-win solution for all involved. These are the same people who print money and cause inflation, talking about protecting investors. Exactly. That's Brian just said that in the comment, and that's 100% right. They print money, they devalue the dollar. Literally, if you keep money in a savings account, you lose 6% every single year. Like, literally, you're losing money by not using it. So there's a lot of people in Congress that they have a really messed up mentality. And, complete speculation, those are the same people that their campaigns are financed by big banks. So they're not protecting investors. They are protecting the people that fund their campaigns. So be very, very weary when a politician says that they have your best interests at heart. I'm very skeptical when it comes to that. But let's move right along. IMF chief economist calls for global policy on cryptocurrency. This is something that has been going on for the past couple of days. They're definitely pushing for regulation. And again, I'm not against regulating the market. That is perfectly fine. But you don't regulate markets by keeping investors out of it, especially retail investors. I'm all about educating people on the risks and rewards of the market when it comes to stock market, real estate, the cryptocurrency market. It's about education and protecting them in a way that doesn't keep them out of the market. Jita Gopinath, the chief economist of the Financial Monetary Fund, the IMF, has called for a global policy to come into place that will regulate cryptocurrency instead of banning it. Pitching for a global policy, Gopinath, who will soon take charge as deputy managing director of the IMF, argued that if countries were to ban crypto, then they would not have any control over offshore exchanges that are not subject to their country's regulations, which could result in them being ignored completely. And that's one thing. I need to put my glasses on. I can barely see. There we go. And I agree 100%. At the end of the day, if nations decide that they want to ban cryptocurrencies, guess where they're gonna go? They're gonna go to the dark web, dark markets. Where, I mean, at the end of the day, unfortunately, that's where cryptocurrencies, in their youth, where they were first used and where they gained, popularity. But now that they've come out of the darkness, regulators have to make sure that they don't send them back there, because that's where bad things, start to happen. There's no problem with regulating the market. I've said it multiple times already. It's about having comprehensive regulations that protect investors. There are challenges to banning, whether you can end up with truly banning crypto, because many exchanges are offshores and they are not subject to regulations of a particular country. She said. So yeah, she's completely right. The world has to come up with comprehensive global regulation, because at the end of the day, cryptocurrencies market does not, it's not just one country or one region. It is a global market, and having comprehensive global regulations would definitely be beneficial for the market overall. Jita's remark come as nations around the globe consider how to control cryptocurrencies. As Cointelegraph reported in September, the People's Bank of China officially unveiled a series of new measures to combat crypto adoption in China, including enhancing interdepartmental cooperation in suppressing crypto activity. But that's China. I believe that China is the exception to the rule. At the end of the day, they want to control their people, and they don't want them to trade in cryptocurrency. They want the Chinese people to use China's CBDC so they can track every transaction that they do. And at the end of the day, still control their people. But let's move on. India government to make additional changes to crypto bill. This is something that I have talked about almost every single week on this show. The government of India is reportedly planning to make additional changes to the crypto bill. The Cryptocurrency and Regulation of Official Digital Currency Bill 2021 is currently listed to be considered in the winter session of Parliament. However, a senior government official told Business Today, Thursday, that the government is considering reworking the bill and will likely introduce it in the budget session in February, according to the unnamed official. Discussions are still ongoing, and key issues like the treatment of private currencies, the rationale of regulation, and global practices is being looked into once again. The Indian government calls all cryptocurrencies that are not issued by the central bank private cryptocurrencies, including Bitcoin and Ether. In addition, NDTV similarly reported Wednesday that the government is planning to make some changes to the bill. Citing unnamed sources, the publication said the government wants India's crypto regulation to be in tandem with the global framework, but does not want to rush on the crypto law. So I guess they might push it to February to the next parliament session. So we'll see. At the end of the day, I don't have an issue with this. They shouldn't rush into any regulation. They have to make sure that they are not preventing innovation to thrive in the country. At the end of the day, cryptocurrencies are creating a brand new economy of Web3 and metaverse and NFTs. So that is something that countries can rely on, to create jobs and bring more money to the economy. So definitely I like the approach that India's taking and trying to figure out something that it's comprehensive and coherent with the global framework that other countries are trying to implement. But moving on. Russian central bank. What is going on here? There we go. Russian central bank to seek ban on investment in cryptocurrencies. So this is a complete 180 from what India is trying to do. Granted, this is just the Russian central bank. It's not the government. Russian central bank wants to ban investments in cryptocurrency in Russia, seeing risks to financial stability in the rising number of crypto transactions. Two financial market sources close to the bank said. Again, this argument about financial stability, like, it's so overplayed. Like, there's literally no proof that they pose a threat to any financial system. At least not yet. I mean, granted, it could happen. Anything's possible. I mean, the housing market at the end of the day poses a risk to the world financial system. But nothing has happened. This is a multi-trillion-dollar market. And that argument is so overplayed, in my opinion. Russia has argued for years against cryptocurrencies, saying that they could be used in money laundering or finance terrorism. It eventually gave them legal status in 2020, but banned their use as means of payments. The central bank is now in talks with market players and experts about a possible ban. If approved by lawmakers, it could apply to new purchases of crypto assets, but not to those bought in the past, said one of the financial market sources who requested anonymity due to the sensitivity of the matter. Putin came out not too long ago, and he said that blockchain and cryptocurrencies, they could have utility, but the market needs to be monitored. So again, this is the central bank. It just depends what Putin wants to do when it comes to cryptocurrencies. That's another country, he has a pretty good grip when it comes to their politics. So at the end of the day, it's what he wants to do. So I'm hopeful that they're not going to ban it. Again, comprehensive regulation, I think, is the best way to approach the problem. U.S. Senate confirms new CFTC share. Senate confirmed Rustin Benham as the next chair of the Commodity Futures Trading Commission amid a flurry of late evening confirmations on December 15th. That just took place yesterday. Benham has served as the acting chair since the beginning of the Biden administration in January, prior to which he had been a commissioner since 2017. At his confirmation hearing before the Senate Agriculture Committee in October, Bennett asked Congress to expand the CFTC's power over cryptocurrency markets. While the authority in spot rather than future markets is currently limited to enforcement action against market manipulation and fraud, there has been a growing push to build a regulatory regime for cryptocurrency spot markets at the CFTC. And I'm all about the CFTC taking over the crypto market. I'd rather have the CFTC than the SEC take over the cryptocurrency market. I actually went back to an article from October 27th where he was talking about, expanding the CFTC's power over cryptocurrency. So the Commodity Futures Trading Commission is ready to be the main federal regulator for crypto. Its acting head said on Wednesday. That's Rustin Benham. So let me see. The CFTC has responsibly and aggressively been pursuing enforcement cases in the digital asset markets for a number of years now, Benham said, pointing to the agency's recent settlement with crypto exchange Kraken and stablecoin issuer Tether. The regulator pointed to the size of the crypto market, noting that the overall market cap is about $2.7 trillion now, and nearly 60% of them were commodities. I think it is important for the committee to reconsider and consider expanding the authority of the CFTC, Benham said. And again, I'm all about him taking over the cryptocurrency market. It would be way better than the SEC. I do not like the SEC. The way that they're going about this entire thing is wrong, in my opinion. So I'm all for it. I'm not against it at all. So hopefully that happens. On other news, former First Lady Melania Trump launches NFT platform on Solana blockchain. Melania Trump, the wife of the immediate past president of the United States, Donald Trump, is launching a non-fungible token platform on the Solana blockchain. In a press statement published on December 16th, 2021, Melania said that the NFT platform is a reflection of her passion for the arts. The first NFT available on the platform is named Melania's Vision. It's a watercolor art by Marc Antoine Coulon, portraying Melania and an audio recording of her with a message of hope. The limited edition NFT will be sold for one Solana, worth about $187 at current rate. Subsequently, Mrs. Trump is expected to release NFTs regularly and plans to hold a one-of-a-kind auction of historical importance scheduled for January 2022. The auction will feature digital artwork, physical artwork, and physical one-of-a-kind accessories. So, yeah, Melania entering the NFT game. That's pretty cool in my opinion. But moving on. Bank of America impressed by Avalanche scaling capabilities. I'm a huge fan of Avalanche too. I think it's going to be one of those blockchains that sticks around for a really long time. In a research note released to its clients, Bank of America has been singing praises of the smart contract platform, claiming that Avalanche's subnet feature is the driving force behind the multitude of projects, more than 380 to be exact, that have been built on the platform. This appreciation is quite meaningful for Avalanche, as the multinational investment bank is the second largest banking institution in the US and the 8th largest bank in the world. The research note was put together by a team of analysts led by global crypto and digital asset strategist at Alkesh Shah, and published on December 10th to keep clients and stakeholders well informed. According to its content, the Avalanche subnet enable validation of around 4,500 transactions per second, which is also at much lower cost than competing blockchains, especially Ethereum. So, I mean, I'm a fan of Avalanche. Again, Avalanche I think is sitting on number 10, up 22%. It's one of the few that is up for the week at 21%. So, again, I'm a huge fan of Avalanche. I think it'll be around for a hot minute. But let's move on. 800,000 worth of Ethereum are burned every hour, data shows. Around 800,000 worth of the second largest cryptocurrency by market cap, Ethereum, are currently being burned every hour according to available data. Ethereum burns started after the network's London hard fork went live on August 5th. According to the data from tracking website Watch the Burn and first reported by Benzinga, around 202 ETH worth 818,000 are being burned every hour. This means that in a day, nearly 31 million worth of the cryptocurrency are burnt. Per day, Ethereum net issuance is around almost 6,000, worth over 24 million, which means that its net supply reduction stands at around 56%. Since the cryptocurrency burn mechanism was introduced, 4.8 billion worth of ETH has been burnt, while its total net issuance was 2.3 billion. The figures show that a total net reduction in Ethereum supply of 67.5%. So pretty much after the London hard fork, Ethereum became a deflationary asset. I mean, that's pretty cool. That's definitely a positive thing for the price. And honestly, I see the price increasing just because of this hard fork. When Ethereum 2.0 launches and it moves completely into a stake focus ecosystem, then I think that will definitely help with transactions, the cost of gas fees. So, and the fact that it has become a deflationary asset, I think it's all positive for the price of Ethereum. I'm not a huge fan of Ethereum. I think that there are better blockchains out there, but this is pretty cool overall. And then Robinhood enables U.S. users to gift crypto for the holidays. The trading app suggested gifting cryptocurrency this holiday season could help newbies taking the first step and have interesting conversations around the dinner table in the future. The trading app has announced that its users will be able to give friends and families crypto over the holiday season. In a Thursday announcement, Robinhood said its users, with the exception of those in Hawaii and Nevada, could send as little as $1 worth of BTC or 6 other cryptocurrencies with personalized digital cards starting on December 22nd. To ensure the crypto is not lost by a recipient unwilling or unable to use it, the trading app has set up a 14-day window to accept the gift, at which point the users will not be charged. So that's pretty cool. I think that's huge for adoption. I might find a couple people to send some crypto to. So I think that's a pretty cool feature that Robinhood is implementing. Nexo will soon let users borrow cash against CryptoPunks and Bored Apes. Crypto lender Nexo is teaming up with Three Arrows Capital to launch a new crypto credit service backed by valuable non-fungible token. As is the case with Nexo's existing products, clients will be able to use NFTs as collateral to borrow stablecoins, Ethereums, and other digital currencies. Nexo's NFT lending desk will begin accepting Bored Apes and CryptoPunks NFT collections, with more collections to be announced in the upcoming weeks. Bored Apes and CryptoPunks are among the most popular and expensive NFTs collections in the market, with the price tag on some of them reaching hundreds of thousands of dollars. So, again, I think that's another pretty cool feature that, another crypto platform's implementing. That's pretty cool. I mean, there's not much to say about that. That's pretty awesome. And then this one, I found this article very interesting. And like I said earlier in the show, if you think that politicians have your best interests at heart, you got to start reconsidering, because it's a mess. House Speaker Nancy Pelosi opposes banning Congress members from owning individual stocks. We're a free market economy, she says. So House Speaker Nancy Pelosi scoffed Wednesday at the idea of banning congressional lawmakers and their spouses from owning shares of individual companies, despite the possibilities for conflict of interest between their legislative duties and personal finances. No, Pelosi, Democrat of California, told reporters at a news conference where she was asked whether she would support such prohibition. We're a free market economy, she said. They should be able to participate in that. Pelosi's dismissal of the idea of a stock purchase ban came in response to questions about a Business Insider investigative report this week on a share ownership by lawmakers, and after controversies over stock purchases by a number of senators since the beginning of COVID-19 pandemic. And there was actually not only purchases but sales right before the COVID was, declared a pandemic. A lot of senators in Congress sold their stocks because of information that they received in Congress. So it's I honestly don't know how that's okay. And at the end of the day, one thing that I haven't been able to wrap my head around is how somebody in public service their entire life is worth millions of dollars. Like, how does that make any sense? How do you become a millionaire from being in public service? And it's not like their salaries are bad. Speaker of the House salary. They make good money. Speaker of the House of Representatives, $223,000. So I don't understand. And her net worth, Pelosi net worth. Can I see it? What does Nancy Pelosi? How rich is Nancy Pelosi? I just, out of curiosity, I'm not trying to be political or anything. These apply. Get $120 million. Again, this is somebody that has been in public service their entire life. I'm not trying to be political or anything. This applies to both sides. Democrats and Republicans and independents. It makes no sense to me how you can be worth hundreds of millions of dollars, but you've been in public service your entire life. So, and I mean, there is actually, it was just banned by Twitter, but there was a Twitter handle, Nancy Pelosi's portfolio, and they tracked it. Nancy Pelosi's stock portfolio is one of the best performing portfolios in American history. So there's definitely an issue there, and for you not to realize that, it's pretty naive in your part, or you just want to be blinded to it. But anyway, that is all we have for today, guys. Like always, let me see. Let me put this over here. Put this over here. Don't forget, we are giving this NFT away. All you have to do is subscribe to the channel, and for a chance for you to win it, at 500 subscribers, we are going to give it away. It is one of 999, as they are constantly being burned by different people. So, like I said, all you have to do is subscribe to the YouTube channel, and at 500 subscribers, we are going to give it away to one lucky winner. We appreciate you guys watching the show, all of our subscribers. Make sure to like, share, and subscribe to our channel. That's all we have for today. We'll catch you guys on the next one.